when the economy's collapsed, what you're going to have left is gold and silver. And it's right now it's an insurance policy, and the insurance policy in term ends up paying out as being money. And so it's extremely important to be holding physical assets of gold and silver. And I could not be more excited for this year, for people who are invested in gold and silver. I think it's going to be an incredible year.
On July 29th, Tesla will have their grand opening for their Gigafactory in Nevada. We believe this will send lithium stocks soaring. Our last suggestion has doubled since March 28th. To learn more about this sector and our newly released lithium investment recommendation, visit crushthestreet.com/whitegold.
Hello, everyone, and welcome into Future Money Trends. I am Kenneth Amaduri, and I'm joined today with a special guest, Bo Polny of Gold2020forecast.com. He's going to give us an update on what is happening in the precious metals market. We're going to talk about oil. We're also going to get his thoughts on the stock market, and you got to believe that it's all interrelated. They're all inversely related, directly related, some way, some form, they're connected. And he's going to give us some great insight on this. I've already overlooked some of the charts he sent me, and they're very impressive, and he's going to go through them with us today. Bo, thanks for joining me today.
Ken, thanks for having me back, and it's a pleasure to speak with you as always. Thank you.
Absolutely. Bo, I want to get your thoughts here on gold. Let's start off with precious metals. We got a lot of guys talking about how they're getting into it. I mean, Stanley Druckenmiller, George Soros, Carl Icahn, they're entering the market with a lot of excitement. And you know what? It seems like an opportunity here. I mean, this is a blessing to see gold go from 1,300 here and now at 1,210. Some people, this is reminiscent of the bear market. Unfortunately, this is they're kind of getting scared with the action that we're seeing. So let's start off with precious metals. Is the pullback that we are seeing a blessing? Would you call it a blessing, or is it concerning you going forward here? Is seeing the prices and the action of it going lower?
Ken, the best answer is when you and I interviewed in December on the 3rd specifically. That was the final bear market low for gold at $1,045. Okay, gold is in a bull market formation, and all we're experiencing is a incredible buying opportunity right now. This is what everybody's been waiting for, but when the price comes to this level, it's funny, people now get scared and should I buy? And instead, they should be doing everything they can be doing to get precious metals in their hands, because this is a blessing. It's a blessing, is what it is, Ken.
Well, you sent me a few charts here, and I want to go over them with you. And you've been able to really kind of highlight, what gold has been doing, what silver has been doing from a long-term perspective. And the way you explained it to me is this is very normal. This is very healthy, and the upside is around the corner. So maybe you can take us through a couple of these charts here and give us an idea of what to expect here with gold and silver.
Sure. So let's have a look at that. If you pull up slide number 1, on the very first slide, you're going to see silver at the top, gold at the bottom. On that slide, you will see a red line. The red line for silver is the 500-day moving average, and for gold, it's the 600-day moving average. Okay? Looking at those lines, you'll see that, again, this is a long-term perspective, so this takes gold all the way back. These charts go back to the year 2009. You'll notice that silver and gold traded above that red line for 2009, 10, 11, and a part of actually 12, and then it broke in 13. So basically, as of 2013, both silver and gold have been in bear market formation, so they've been trading under that line. Something really special happened this year, 2016. Go have a look. You'll see that silver went above the line in April, and into May. Yeah. You'll notice that, and you'll see that in gold in February, it went above the line, and it stayed above the line, and now it's toying with the line, playing with the line, but it's sitting on it. Okay, so all you're seeing is gold coming back to retest its support line. That's it. It's beautiful.
And one of the things that you did mention back in the interview on December is that we would not go below that. And, seeing this line here, these lines that you're showing me, it would indicate that we're in this bull market. We're in this bull market for the long haul here. And to reiterate your words, it's going to be a blessing to own some gold and silver at these prices. So we got some other slides here, and I wanted to get your thoughts on why gold and silver will continue to break out. I'm looking at a flag. Please explain.
Okay, so let's look at a flag formation. So the flag formation, what we're seeing right there is basically a long-term pattern. I'm going to show you in a second on gold, but basically a flag is the pole is the blue section, and the flag is the green section. And so for gold, the blue section, and for what I would call true price discovery, okay? And the green section, the flag, that was what we call price suppression. So the world's been speaking about price suppression. Guess what happens? Eventually, price suppression fails, and gold finds its true value with silver. And that's when the gold goes vertical to its objective time point, okay? So if we go to slide number 5, we can look at this a little more in more detail. But you'll see the blue section for silver and for gold was nothing more than true price discovery. You'll see the red line on there. Well, both metals were trading above the red line. There's the long-term support line, and that was true price discovery in the year 2011, 12. And price manipulation came into play, and so the price went down in the flag formation for a total of the year 2012, 13, 14, and 15. So for 4 years, the flag formed. And now you'll notice, where's gold and where's silver trading on that flag? Where do you see, Ken?
They're right at their upper boundaries.
Right. It's right at the upper boundaries, and look what they have underneath them.
Support.
Massive support. Okay? So this is incredible. What a setup. Okay? And so you've got massive support being built into a corner, and you got a bull flag about to break. Okay? Very exciting and then those break points on silver is around $18, and for gold is around $1,300. When those break, okay, so what we're seeing right now is the final battle for gold. This is it. What we're seeing here is a massive battle trying to keep the price down versus the entities trying to take it up. So, ever since the Shanghai Gold Exchange went live, what happened immediately was silver went vertical. Okay, and so now the problem with silver for the people trying to take it down is you got these massive support lines underneath it. So a wedge is building, and that wedge is going to break to the upside for precious metals.
Okay, Bo, let's talk about oil here. Oil has hit 50, and we're in that range now where it's pretty much at significant highs here from where it has been, and it would appear that the stock market and oil are kind of going in tandem here, and it almost seems like the stock market needs higher oil prices. And so let's get your thoughts here. You gave me a chart on oil. What are we seeing here with the oil picture, and what can we expect in the oil markets going forward?
So Ken, if we look at oil, and what I've got there is two charts. The top one is from the year 2000, starting the year 2013 to present. And again, on there I've included two lines also. So the red line is the 400-day moving average, and the one below that is the 100-day moving average. You'll notice that oil is, since it crashed, it's never ever touched that red line until just this past couple of weeks. In the end of May here, it's finally gone up, and it's actually sitting, if you look at the chart below, the zoom in of it, the 1-year chart, you'll see oil actually trading above the 400-day support. It was at one point resistance, now it's become a support line. So all I'm looking at is I'm looking at oil being a commodity like gold and silver, but gold and silver big money. But again, oil being tangible, I see that oil is forming what's called a wedge, and that's actually an ascending bullish wedge. It's about to break out, just like gold did when it made its low in December of last year and in February, and then it broke free of the wedge and it went vertical in February. So I see the same thing happening here for oil. I think oil is going to break free of the vertical. We have a very specific time point that we include in what's called our oil index, but we do have time point for the cycle high that's coming in here in the month of June for oil. So again, I think oil, silver, gold are going to have a very, very exciting month of June. And again, they're all the commodities, and I think they're all going to be going up this coming month. So next month of June. And again, those lines are very impressive, how the support, and you even notice the 100-day, how it bounced off it in April and immediately went straight vertical. And all those support lines look incredible, and I can just tell you that oil's chart is going to be very impressive this year.
Bo, it would be, it's going to be very interesting going into, from what I can tell, more economic turmoil, more problems, and to continue to see oil go higher and higher. What fundamentals does oil have to go higher with gold and silver, with gold and silver being, a monetary asset, a precious commodity? Oil would not fall into that category. Can you explain this dichotomy, the characteristic of oil with the macro scenario that we're seeing?
That's a great question. I'm looking at the commodity sector as a whole, and in gold, silver, and oil being a commodity, I think it's just going to be the fact that the commodity sector, it goes vertical with soybean and sugar and every other commodity. I think the world is going to run to commodities and flee from paper. And so I look at oil not anything more at this point at the bottom's in. I look at oil as a commodity, as something it's tangible. And so as we talk about the stock market a second, I basically see nothing but bearishness all over the stock market. And I think when the stock market goes down, I believe on this wave, oil is going to, it could come down maybe a little bit, but it may not be as strong as gold and silver in terms of strength, but I still see oil going because it's tangible, and I believe it's going to go up because it's not a paper asset.
Well, let's get right into the stock market here. You've done a lot of research on it, and you've shown time and time again how we're seeing just these stock markets around the world, not hit new highs. They're not hitting new highs. They made their highs, a year ago. I mean, you made a significant call on the stock market a year ago, calling the high. And so let's get your thoughts. I mean, it seems like there's going to be an inverse relationship between what we see with the overall stock market and precious metals.
Yeah, that's exactly how I see this thing playing out. I think the world running from paper assets. I think it's going to be, and by doing that, that's basically saying it's a loss of faith and confidence. I see that the world is basically going to run to gold, going to run to silver, to any kind of commodity that they can hold and purchase and possess, because they're going to lose faith and confidence in paper assets. So when you look at the long-term perspective on the Dow, for example, in this chart I said, it's called a megaphone pattern or jaws of death pattern. But the bottom line is you got a triple top formed. You have one occurred in the year 2000. One in 2008, 7-8, and then the last one occurred just in July of last year when we did we called the top on the Nasdaq. So that's a 8.5, and that was on July 20th. Since then, we've got points 2 and 4 complete, but we don't have point 6 complete. So that 0.6 is basically you're looking at around 5,000, 6,000 on the Dow. So it's a incredibly terrible crash. It's hard to fathom at this point in time, but it's coming. It's going to end up happening where the markets literally collapse. And the longer they hold the price up through manipulation, the more devastating and fast would be the key word is fast. How fast it will crash.
I'm looking at the decreasing volume, this arrow, which is just going straight down. So I want to ask you and see if you can kind of shed some light on what that means and the significance of it.
Well, in a bull market, you have increasing volume. Bear markets have decreasing volume. So even though the market's been going up since 0.4, the volume's been dropping, which means it's completely contrary to what a bull market's supposed to do. If that truly is a bull market between 8.4 and 5, you'd see volume rising, not falling. And so ultimately, you're just seeing the volume keep dropping off. The volume keeps dropping, and as the volume keeps falling, eventually the thing just collapses. And so it's completely contrary to what should have happened between point 4 and point 5.
So talking about what we are seeing around the world with all stock markets, making these tops, and what you've pointed out is triple tops here. So take us through my slide here that I got on my screen, slide 10, Bo, and just show us what we're seeing here.
Right. So what we're seeing on the markets is just incredible. But since the top that occurred in the year 2015. All you're seeing is lower highs. You're seeing, with Dow, NASDAQ, London, Switzerland, Canada, Germany, and all the markets since last year have dropped and now making triple tops. And none of which are higher. That's complete bearish trend. But but through the forces that be, they're manipulating and they're trying to hold it to make it look and to make Disneyland look like everything's fine. But the reality of it is that there's not one chart that you can actually go to across the world and say, hey, that chart's fine, because they're not. Not one chart across the world is in a bull formation. They're all bear formations, all about to collapse. Because the best example I can actually show you is just one stock that everybody knows is Apple. You look at the chart, you'll see that in the year 2015, that's slide 12 I got there for you, and you notice it's the perfect triple top. And then you notice the collapse that happened right afterwards in August. It dropped right off the triple top. But then to make matters even worse, you have in November of 2015, you have a lower high, bearish. And then you had in April another bearish lower high. And then those black arrows are nothing but lows. And then in May of this year, just a couple weeks ago, you had a lower low just come in. So the bottom line is it just triple tops, lower high, low. It's complete bear trend on Apple. And eventually, very soon actually, this ends up collapsing, and it just craters in it. And it's a terrible collapse that follows. The price points are incredibly low.
Bo, does Janet Yellen look at these kind of charts, and is she going to be making a decision here in June on whether or not to raise rates based on what she's seeing here, or is it just going to be the phony GDP numbers and unemployment that they're going to attempt to decide on what to do going forward with interest rates?
The bigger question is what happens between now and then. That's what no one's paying attention to. They're paying attention to the meeting and not questioning what happens between now and then. So that's actually a very, very important topic to consider. And then after that, I have the precious metals, everything looking really, really great coming up for the rest of the year. And I still see incredible moves that we're still expecting this year. And it all depends on what happens here in the very near future off this turn to the upside.
Bo, you gave us a great amount of information today, and you've had a lot of significant calls on this show, and I was hoping you would be able to just kind of just give us the essence of what are contained in all of these charts, and a summary, if you would, of what it means and how people should proceed going forward.
I would say, with the stock market, to be sitting in the stock market and believe that the markets are going to go higher, I think is absolutely, at this point, actually looking at like the Apple chart, for example, there's not one chart in the world that I can find that's a bullish formation, so it's extremely dangerous, and all I see is the collapse coming. And then for gold and silver specifically, when gold and silver took off and they made these new higher highs in the early part of the year, people waiting for a pullback. Now that we're seeing a pullback right now, this is a complete blessing in terms of happening in terms of prices. So complete blessing we're looking at, and gold and silver ultimately, what did they end up being? They end up being money. They've always been money. It's just that when paper collapses, when the economies collapse, what you're going to have left is gold and silver. And it's right now it's an insurance policy, and the insurance policy in turn ends up paying out as being money. And so it's extremely important to be holding physical assets of gold and silver. And I could not be more excited for this year, for people who are invested in gold and silver. I think it's going to be an incredible year. So it's very exciting times ahead. And definitely, we've got a couple of time points. Especially, there's two very important time points that we've got here for the month of June. For precious metals and for the stock market, so we can cover those. And then later in the year, another secondary, very important time point for the precious metals as well, too. So great things ahead, and I wish everybody well, but I really hope people, pay attention and do own physical gold and physical silver.
It's great advice right there, everyone. This is Bo Polny of Gold2020forecast.com. Bo, as always, thank you so much for coming on the show with me and taking the time and sharing with us your research and your knowledge.
My pleasure, Ken. Thank you for having me back. I really appreciate it.